Larry Pitkowsky, one stock you like over at the GoodHaven Fund is Barrick Gold. Now, Barrick's up over 80% year-to-date. Gold's only up around 17% year-to-date. So where's all that leverage coming from?
You know, Greg, Barrick is endemic of what we try and do with the GoodHaven Fund. Our approach and our philosophy never changed, but where we're finding the opportunities always changes. Over the last 2 years, we were aggressively buying Barrick all the way down to $5-6 a share last year. We had a thesis that new management was going to make enormous changes to what had once been a great company but had stumbled. They were going to cut costs, reduce leverage. That is beginning to play out, and we think the market is beginning to notice, hence the stock price rise, but we think there's much more left to come.
All right, you also like Staples. That stock's up around 2% so far this year, but it's down over 40% in the past year. People keep wanting to know whether or not this Office Depot deal is going to get done or not.
We had owned some Staples before the announced Staples Office Depot attempted merger. We always thought it had a low likelihood of getting approved, given how the government has approached many in-market mergers. The government has sued to stop the transaction, which was not surprising. However, we feel Staples stock has declined beyond what was appropriate, and it's now intriguing, and we've been adding to it periodically.
All right, you also like Leucadia. This is an interesting pick. This stock is down 35% in the past year. It owns Jeffries, it owns National Beef, it owns some property in Texas where there's drilling. So why do you want to own a company which owns a piece of a lot of things which aren't doing well right now?
You know, Greg, Leucadia, before it had merged with Jeffries, had a stellar track record of creating value for its owners. I think it compounded book value at something like 18% a year for a couple of decades. Jeffries compounded book value at, I think, about 14% a year under Richie Handler when it was run independently. And by the way, we think that's one of the best track records that we are aware of in a large broker-dealer that was public. They are now merged. They merged in 2013. And the recent operating results from Jeffries have been not what they would like them to be, but it's been a very difficult environment. And because of that, you're getting a chance to buy the company at about 75 to 80% of tangible book value. They have been repurchasing shares, which they don't do that often. If you wait for some kind of a great, all-clear earnings period from Jeffries and from the other division, the stock is unlikely to be at this cheap of a price.
All right, and then finally, you like HPQ. Now, back in the fall when Hewlett-Packard split into two companies, there was HPQ, which was the printers and the computers business, and then there was HPE, which was the enterprise business. So far, HPQ has underperformed the HPE. So why do you like the Q as opposed to the E?
Well, not shocking. We always, we tend to be attracted to the one that has had worse near-term price performance because we feel we're getting a bigger bargain there. We're fine with both companies. By the way, we made a lot of money with old HP, having bought many, many shares after Meg Whitman took over, stabilized the ship. The stock went from the low teens on the old shares to $40, where we sold half of what we own. HPQ today intrigues us a little bit more than HPE. HPQ generates an enormous amount of free cash, trading at about 6.5 times free cash flow, 5% dividend. It's the printer and PC part of HP. CEO is Dion Weisler and the CFO is Kathy Leschak. And it's very profitable. The top line is declining. We think that has the chance to stop declining in about a year or so. And there's nothing wrong with a business that's slowly declining for a short period of time if you pay a cheap enough price and if management is focused enough on getting the free cash into the hands of the owners, which they clearly are here.
All right, well, thanks a lot, Larry.
Thank you, Greg.
Thank you for watching The Street.